Hey folks, Dan Frio here, the rate update. Today is March 15th, 2021. I'm going to go over what the market has done today and some technicals that we're going to hit, as well as some good news, or hopefully some good news, the Fed is going to come out with on Wednesday. So don't go away. Be right back. Okay, so like usual, it's a day that we're going to sit here on pins and needles waiting for Wednesday when the Federal Reserve is going to come out. Federal Chairman Powell, the Federal Reserve meets this week. They meet on Tuesday, or Monday, Tuesday, and then Wednesday they come out and he basically tells us what they are going to do. Now, every word that he says is put under a microscope, and I post that as soon as we get, his, what do they call that? His transcripts of what he says, and we break it down into what changed from last time. Usually there's not a lot of changes, but we usually post it in red what the terminology is going to be. So let me explain to you kind of what's going on right now and why basically the market is just stagnant, and the market is going to be stagnant until that time. So let's get on to what the news is coming out as. So even the stock market is kind of hinging on a lot of this. So right now you can see, and I go to CNBC, why this week's Fed meeting could be March Madness for markets. So there's two things there's a couple of different ways that you could look at this. So the Federal Chairman Powell is going to come out and say, okay, here's the plan that we plan is doing as the Fed to curtail a lot of the rise in rates, bond yields, and mortgage rates. Here, they've been rapidly increasing. So here's what we're going to do to combat that. That's one option that they have. The second one is coming out and saying, guys, we're just going to keep doing things as usual and see where things go. Then the next thing is he could come out and freak out the market and say, guys, because all the news is coming in right now, we're going to start pulling back, our stimulus package. Now, the likelihood of that happening is basically zero. It could happen. And if you see that, you're going to see mortgage rates skyrocket. You're going to see the stock market plunge, and you're going to see bond yields go out the roof. Now, I'm not saying that's going to happen. I don't think there's even a 0.0001 chance of that happening. I think we're going to be a combination of one or two. They're going to come out and say, we're going to twist rates, or we're going to do this, or we're going to do that to curtail the market because the employment numbers aren't where we want them to be. Inflation's creeping up a little bit, but not out of this world. But again, the stimulus package just got approved, so you're not going to see the flush of that money into the markets for at least a couple weeks, and it's not going to be in any reports for at least 30 to 60 days. So my thought, or what I'm thinking is going to happen, he's going to come in and kind of ease the markets, saying, here's what we're going to do to combat the increase in yields that have happened so far and so fast. The 10-year Treasury went from 0.9 to 1.6 within like 2 months. That is crazy fast. So let me get you through. Let's get to the websites so we can focus in on what I'm talking about here. So that is the biggest piece of this puzzle, is what the Fed is going to do. Okay, so now let's see, what happened today because of this news and us waiting on what's going on in the market. Well, nothing. Zero. Mortgage-backed securities didn't move one iota today. Okay, everybody's going to sit on the sidelines and wait for Federal Chairman Powell to come out and say something. Then they're going to put it under a microscope, and then they're going to dissect it. And at that point, you're going to see the market go in one way or another. Where that's going to be, I can only sit here and wait like you guys do. But the data will post Wednesday about 2 o'clock our time. As soon as it does, there will be a reflection in the markets, and we will be at our desks waiting to see if we should lock in rates or if we should continue to float, because that'll give us a direction on what's going on with mortgage rates. Now, just because we've left the day at zero today, let's see what happened throughout the day, because we don't start at zero and end at zero. So we came out of the gate, we rallied, and we love these numbers. Look at the numbers, or look at the charts. Green candlesticks. So what that means is there's a lot of people in the market buying. Those are driving up prices. When the price goes up, rates come down. and then we had a sell-off. Okay, so there's really nothing here for that other than speculation into the market and after the market, but people are going to sit on the sidelines until Wednesday to figure out what's going on. All right, so that's that. So let's get back to the main site. People follow me on a daily basis to see what's going on with mortgage rates. This is the biggest component of your mortgage rate. It's called mortgage-backed security. It's a bond that trades on Wall Street. And this is the single biggest entity or the biggest piece of the component of your mortgage rate. There's one other component, basically, is what we call loan level price adjustments. And that is, what is your credit score? What is the type of property you own? The term of your loan? Are you pulling out cash or doing just a standard rate and term refinance? There's a whole bunch of pieces of that puzzle. But the one component factored in by the markets is the mortgage-backed securities. So you can see we had a deterioration here. And again, guys, when this goes down, don't think, whoa, that's great for rates. No, this isn't the rate. This is what's happening to the price of this particular bond. So we kind of had a huge drop here, and then we started to stabilize. And I still say we should be trading around this level right here. Initially, we'll get to that level. And based on what the Fed says, we should hit this level or this level if the Fed comes out and says what I think they should be saying. They're going to ease the markets. So we will wait till Wednesday to find that out. There's really not much data out today that is going to change the market. And even there's data coming in tomorrow that normally would have an effect on the markets, but probably are not going to, because the Fed is going to talk on Wednesday and they're going to tell us the game plan. So today we had manufacturing index, no big deal. So now we have import price index, retail sales numbers, and a whole bunch of other things that the Fed will be monitoring. But again, there's nothing here, import price index, there's nothing in here that should spook the market tomorrow, because everybody's going to wait for right here, the Fed's interest rate decision. They're going to come out and tell us. And I said 2 o'clock our time. It's 1 o'clock Eastern. I'm in Central Standard Time. So 1 o'clock, Federal Chairman Powell come out and he'll start talking publicly, and he'll give us the direction that the Fed is taking. Well, that is basically the hinging point of the week. So there's no need to go through all these technicals and everything else, because everything is thrown out the window now. Like I said before, what's the economy? What's the stock market following? What's the bond market following? What's cryptocurrencies following? What's everything following? The corona pandemic, vaccines, stimulus, and the Fed. Okay, vaccines are out. The pandemic's starting to ease. Now there's also, everybody's coming out, oh, spring break is going to come. I'm kind of done with that part of it. I'm not saying it's over or whatever, but I think, people are getting to the point, they're getting a little bit crazy, stir crazy with the pandemic stuff, but the vaccines are coming out rapid and in huge quantities. So by May, everybody should be vaccinated. That should put a backdrop on the coronavirus piece of things. Now, Federal Reserve has two mandates. They control, or they focus on employment and inflation. Okay, inflation's intact right now, and there's people that they're like, Dan, inflation hasn't moved. I know, guys, it hasn't moved yet, but we're just funneling out this money now. And even the previous stimulus packages, all the money hasn't been used. Once all the money gets into the system, the economy, you're going to see inflation. But let's worry about that next year or so forth. So that can's going to be kicked down the road at least 6 months or so. So what we want to focus on now, what the Fed's going to do. Are they going to raise rates? What are they going to do? Well, the employment numbers aren't good, and inflation's staying in place. So they're not going to come in and say we're going to lower rates, because we're basically at zero anyways. But what they're going to probably say is they're going to come in and start buying up more mortgage-backed securities to drive down the rates a little bit more to help stimulate the economy. And they're going to do a twist on the back end bond yields. Now, if that happens, I will come out and explain to you what the bond twist means, how it works, what they do, and how it'll affect all of us. But I'm not going to go over that unless that is what really takes place. So now we get on to the headlines for today. Well, basically the headlines today are this: waiting on Fed Day, and that day is Wednesday. So Wednesday is going to be a huge day. And my whole staff will be sitting at our desks at 2 o'clock our time waiting for the Fed announcement, because it will, I promise you, it will move the markets. Now, getting on to rates for today. This is the daily market briefing. This is the market trends. Okay, this is trends. This isn't my rate. It is the rates throughout the country and where they basically average. And I do the 30-year rates on a daily basis. So I go over 30-year conforming, jumbo, FHA, and VA. Right now, here's where those rates are. Okay, so we're going to focus on 2 or 3 different areas from there. The 1-day delta, the 7-day delta, and the 4-week delta. Delta means change. Okay, what the change means is, in this position, when you see 6 basis points, what basis points means is 1/100th. It's in the 100th position when you go through and factor these out. So meaning, we are up 6 basis points from where we were Friday. So if you move that over here, that means Friday the rate was 3.20, because if we add 6 to that, it's the 100th spot, brings us to 3.26, and it goes accordingly. Okay, so all those move over. Again, guys, this is the national average. If you have a little bit higher than this, there might be a reason for that. Let me know. We can dig in on it and see what that reasoning is. You just might need to work, if you're working with another lender, you might need to work with us to get you that better rate. If the rate is much, much lower, please be skeptical. Are they overcharging you on fees? Are they charging you points? Are they charging you a bunch of excess stuff to make up the difference? So for example, if you come back and you say, Dan, I'm getting a rate at 2.25, it's probably not possible without paying a ton of fees. So that's why I post this on a daily basis. Okay, but let's go over to the 7-day delta. The 7-day delta is where we were last week at this time. Basically, we were flat. Again, the 6 basis points or 4 basis points or 0 basis points, that's kind of irrelative because it's in the 100th spot, okay? But if you go back where we were 4 weeks ago, rates are 0.4, on average 0.4 higher than where we were a month ago. Good news, maybe bad news, is we're still lower than where we were a year ago. A year ago, we were teetering the 3.75, 3.8 range, and we're at 3.2. So we're still about 0.5% lower right now than where we were a year ago. Okay, so that's that part of it. So that concludes that piece of things. What I ask you to do is I'm going to put a report together and have that posted tomorrow. Tomorrow you're going to have 2 special reports coming out from me. One is breaking down forbearance to a T. So if you're in forbearance, I need you to watch tomorrow's video and or call us before your forbearance ends. Why? We need to work on an exit strategy for you. Your exit strategy might be keep with what you have, or we refinance you right now, or you get caught up with your payments. And some of the programs require that the forbearance ends and you make 3 payments and then we can refinance you. So that's why I need you to call us so we can tell you, based on the loan that you have, you particular, what your best exit strategy is. Okay, so that's that part of it. If you're building a home, we have hundreds of people calling us a day, freaking out. They're saying, Dan, I'm building a house. I was pre-approved at 2.5, but we're watching your channel and now we're at maybe 3.5. By the time we're done, could this be 4? I can't afford the house if it's at 4. How can I lock in on an extended lock? We have programs that'll lock you up to 6 months, and in some categories, 12 months. However, it's only in particular states. So if you email me or comment down below, Dan, I need the extended lock, please let me know what state you're in so I can let you know if it's eligible or not. And I'll be posting a specific video on that tomorrow as well. But if you'd like to reach out to us and you're like, Dan, I like what you're doing. I do need you guys' help. How do I reach you? Before we get there, all I ask you to do is please give me a thumbs up. Friday's video, we got 10,000 views and we had 150 thumbs up. So let's see if we can beat that today. So please give me a thumbs up, subscribe down below so it helps me get noticed more with the YouTube algorithms. Click the bell so every time I post a video, you get an alert. But how do you reach us? Easy. Go to therateupdate.com. Scroll down to the bottom and there's my 800 number, 800-775-LOAN. That's 800-775-5555. 5626, or you can schedule an appointment. We have about 10 or 15 of these a day going on. We usually do them either by a call or a Zoom. So you can just click here and pick the time frame that you like and what day I have available. So that's that. Or what I ask a lot of people to do is email me. If you're working with a lender right now and you're like, Dan, can you review this? Let me know if it's a good deal or maybe you guys can do better. Email me that loan estimate. If you haven't refinanced and you're like, Dan, I'm in a mortgage, my rate's 4.5, and I just want to see my options, email me your mortgage statement. The more information you can give me, the better my analysis back to you would be or will be. So you can email me at D for Dan, Frio. So it's dfrio@preferredrate.com. Now we have a whole bunch of other links. I got a mobile app right here. We're having a little glitches with this in specific states. So hold off on this unless you're in Illinois or in California on this one. If you want to apply online, you can click here, click the Apply Now button, and you'll be on your way. Or if you're looking to buy a house or get pre-approved, and you're like, I really don't know some things, and I just want to kind of just dabble and see what I can find out, click this button right here. It'll ask you about 12 or 18 questions. Based on the answers to those questions, it'll help guide us to the exact program that you fit into or would be best for you. This tab here is if you're looking to refinance. And then here, you can just click here if you want somebody to call you or email you, and you can go back and forth with us via that way as well. So that is it for today, guys. I want to thank you so much for watching. God bless. I'll see you tomorrow.